Hello and welcome to Wirelive episode 8. We are here today to talk all about innovation in financial services, and we're going to have a bit of an AI slant, as so many innovation conversations do, but we're going to talk a little bit more broadly about some of the trends that are going on in the financial services sector, some different perspectives from our fantastic guests that we have today on some of the opportunities and challenges that lie ahead for the industry as a whole, and our observations from the kind of various perches that we occupy in this space. So as many of you will know, I'm Rob, I'm the CEO of Wirelive, and with me today I have two fantastic guests, Juliet Rogan from Barclays and Ian MacArthur from the agency Sagittarius. And as a bit of a primer for today, Wirelive and Sagittarius decided to commission a report into AI and technology adoption across financial services, which we're also making available straight after today's recording. So if you've signed up for today, rather than sort of stumbling along on YouTube and finding yourself here, then you'll receive a copy of the report. If you haven't already signed up and you'd like to receive a copy of the report, it'll be available on our websites collectively, and we're in the notes as well. So without any further ado, allow me to introduce our guests. Why don't you say hello, guys? Juliet, say hello.
Hi, I'm Juliet. I head up High Growth and Entrepreneurs at Barclays.
And Ian.
Hi everyone, I'm Ian. I'm Chief Experience Officer at Sagittarius.
I love this, concise, to the point, where we're off to the races. And to you, listener, watching this, or viewer, I should say, the three of us have actually already started a new business based on a tropical fruit, which maybe we'll reveal to you later today. But there's another reason why I can't mention the name of that tropical fruit right now, so we may have to come back to that. So FS, financial services, we'll probably call it FS a lot today, so get used to the abbreviation, I think is in a really interesting place. I think that it's an industry that is as old as time. You know, banking and money and all the associated services that go with it have obviously been around a while, I think it's fair to say. But I think that particularly in the last decade and maybe even in the last 2 to 3 years, again, have had to really evolve and innovate to meet the needs of different types of customers. And I think that's true in both the commercial and retail contexts. And I think for me, technology is becoming a really important part of that evolution. And I suppose from my perspective, you know, the thing we do at Wirelive is help businesses solve the tech problems that come from the digital age. We normally do that with cloud platforms and cloud services, but I think that technology has become an integral part of every business. I personally believe there is no longer such a thing as a technology company, because every business has to become a technology company. And so, you know, you look at financial services, an industry that often due to risk and trust and some interesting things we'll get into today, perhaps has struggled to be at the bleeding edge of some of these innovations, and for good reasons, I think is now being forced or certainly coerced towards adopting technology at an ever faster pace. Ian, why don't we come to you? From, you know, you very much live in the experience space. How does my opening monologue sit with you? Would you add anything? Would you disagree? What are your thoughts on the kind of overall theme today?
Yeah, no, I think you've got a point. I would probably be slightly more praising the financial services sector, perhaps. So I think actually for a number of years now, maybe even a decade, financial services has got quite good at innovation, certainly innovation at scale, and it's kind of baked into their operations to a degree. And I think probably from the research that you mentioned a minute ago, we kind of understand that they're kind of primed to think about things like AI. Where I think the challenge is that if we kind of step back 6 months and think about who our customer was going to be, you know, the customer of 2023, and this was, you know, they were going to be more demanding, they were going to be expecting a rich experience across all devices, you know, reliance on voice tech and wearables and all of that stuff. And from my point of view, the customer of 2023 has arrived 2 years early. They're here now, they're here for 2021, and that's going to be the new challenge for financial services. Yeah, they've been okay at innovation, but can they innovate at the type of speed that I think we're now going to face in the next couple of years? So that's it for me.
And well, maybe you could ask them, the customer of 2023, who won the election. Maybe they know, because we certainly don't know here today in 2020, do we? That's the one and only time I'll mention politics today. So very interesting. So from the customer's perspective, perhaps heightened expectations have arrived a little bit sooner, but you're actually quite complimentary of FS generally in this area. Juliet, from your perspective, we obviously, Ian and I obviously sort of work with FS from the outside. You're very much part of it. What's your view personally, or any comments you'd make from the Barclays perspective on this theme?
Yeah, I mean, I think to Ian's point, the customer of 2023 has arrived sooner. I would actually say maybe it's a customer of what we thought maybe the customer of 2030 has arrived, to the extent that we really have to digitize a lot of our processes and stuff in order to be able to make people, along with other industries, be able to interact with us online through virtual channels. And we've really accelerated that process, which I think has been broadly a very good thing, because it's enabled us to be more future ready in a way that we would obviously have had to have done, but now have done it in a really short space of time. We've had to be a very dynamic organization over the last 6 months in order to be able to demand of not only like government regulation that's come in, or government support, that we've had to build products for very quickly, also being able to interact with our customers, and notwithstanding the fact that we have a branch network and we still have to be available for people that aren't digitally enabled. And that's a really important area for us, because we serve such a large part of the UK economy from a business and personal perspective. We have to have multi-channel interaction with customers.
And I guess in many ways, people often immediately, when they start talking about innovation in banking, I suppose at least, or across financial services generally, people love to tout the challenger banks, right? Everyone thinks, oh yeah, everyone's got a challenger bank story. Isn't it amazing that I can pause my debit card, or whatever that thing might be that people latch onto? But I think that in many ways, an organisation of the scale that Barclays has considerably more resource to move quickly to adapt to these changes. I suppose this is a slightly tangential question, but how are you seeing that? How's that playing out, right? Obviously, you've had a lot of very unexpected challenges thrown at you in a short space of time. As you say, the customer of tomorrow has arrived today. There's been huge regulatory pressure. There's been a whole load of new schemes you've had to build products around, Sybil's loans and all the other associated fun stuff that's come down the pipe. Like, do you think that scale has actually been a real advantage there, because you've been able to move quickly and take on all of those challenges in a short space of time?
I think with scale, it's a double-edged sword, right? We have the capital and the bandwidth and the capacity, I suppose, to move our business in different directions. But as a fintech or a startup would know, they can move much more quickly. I think there's two things we need to be cognizant of within that. And we talked about it earlier, as around making sure that the changes that we make are fair, and that we maintain trust within our both within our colleague base and also our customer base, because that is one of the cornerstones of our business. So we can't move quite as quickly as some of our fintech competitors, not only because of we're a much bigger ship, so to sort of maneuver it takes more, but we need to ensure that given the kind of responsibility we have and hold, we have to make sure that trust element and that serving across multi-channels and really supporting our customers, whether they be business or personal customers, right across the piece, that we're able to maintain it.
Yeah, great. And I think thank you both for following the path I'm trying to lead you down. This is great. This is going exactly where I want it to. I think that trust is such a key word, and it comes in anything to do with money. Trust has to be one of the key themes. And I think when we talked in preparation for today about trust ultimately being the most valuable USP an institution with the history of Barclays has, I think is just, you said it in such a kind of, it was so obvious to you the way you said it, and it really wasn't obvious to me. And I was sort of reflecting on it, thinking, yeah, of course that's true. Like that's so clear actually. But I think that one of the findings from our report was that in terms of adopting artificial intelligence across financial services, the kind of key themes, the key priority was customer service, basically, right? And I think trust and customer service inevitably go hand in hand. And so I think that sort of challenge that you're faced with technology is that if you want to move fast, you are probably going to break things, as Facebook has taught everybody, and it's very hard to do that without like breaking a few eggs, I suppose. You're going to damage that trust relationship potentially with some of your customer base if you try and adopt these things aggressively and roll them out without giving them proper time for testing and all of the kind of stuff that goes with that. Ian, from the experience perspective, this is a challenge you're faced with day in, day out at Sagittarius, working with organizations to kind of roll out these digital platforms. And I know customer service and chatbot and all that stuff comes up a lot in your world. What's your perspective on that balance between innovation and sort of trust and confidence in a brand, and how do you encourage people to think about that?
Yeah, for us, I mean, it's a personal thing as well, but certainly for us, we frame AI as augmented intelligence. The reason that we do that is just because coming at it from the human angle is the most important thing for us, understanding that it's about increasing human bandwidth. And for services, where that comes to trust is picking and choosing where you can add far more human value, and using technology to enable that kind of transfer or that sort of divide and conquer element. So there are whole aspects of a relationship and an experience online that can be given to the robots, for want of a better phrase, because then that gives the humans much more bandwidth and time to interact in the parts where they add far more value. You get a much deeper element of trust. So it's just understanding where the different almost skill sets between the machines and the humans really work. And I think that's a major area that banks could do even better. It's kind of like old school banking chatbots kind of perhaps got this very, very wrong. And we all have got personal stories where we ask questions that the bots just couldn't answer. And there was no handoff. I didn't get that seamless thing where I then was being passed to a real expert member. When you get into wealth management and high growth stuff and high net worth individuals, they really, really care about that stuff. They're going to ask really, really difficult questions. And you've got to get the handoff between tech and humans absolutely perfect to keep that trust thing going, I think.
Yeah, I think that augmentation piece is kind of critical to the extent that technology and AI potentially can sort of reduce operational inefficiency. But we need to kind of really kind of sort out some of those hygiene factors to make that digital experience work well. And then the human interaction, we were very proud of our relationship managers in order to be able to have those conversations, because people still want to speak to people about quite important financial decisions, whether they be for their business or personal lives. Yeah. And I think that's where we as a sort of kind of a big institution in financial services can really differentiate. But certainly, I think one of the aspects of your report touches on fraud and bad actors and things like that, where we ingest so much data. And if we can understand what things look like when they're going badly wrong, then we can, both from a customer experience perspective and also from a kind of fraud and anti-money laundering perspective, try and identify those calling cards in order to be able to stop them. And that, I think, is a really strong use case for some of the AI and the technology and technological advancements in financial services, certainly.
That's as you say, it was definitely one of the things that was picked up in the findings. And I think fraud, AML, KYC stuff is such an obvious place for these technologies to live, because ultimately, when people talk about artificial intelligence, they're often talking in broad strokes. Normally what people mean is machine learning. And machine learning is incredibly adept and efficient at spotting patterns in large data sets, right? So it's the perfect answer to the fraud challenge that so many financial services products have faced. I mean, we actually did some work, which is a public case study for a large multinational insurance company who owns about 150 insurance brands. And it was all about fraud with machine learning. And all they wanted to know was if somebody got a quote for one of their products and then got a quote for the same product or another product in their portfolio and used a different job title. Because due to articles like the lovely Martin Lewis, the money saving expert, telling everybody that your job title affects your premium, what people do is they go on price comparison sites and they say, what if I'm a doctor? What if I'm a dentist? What if I'm a lawyer, right? And they literally go through it, getting quotes until they find the best premium and then they buy it, which seems kind of innocent, but is fraud, right? And is not okay, and actually costs these organizations reasonable sum on an annual basis. And so using machine learning to solve those types of problems, I think, is, and ultimately augmenting the human capability they have in their fraud team, to Ian's point, is a great use of those technologies. But I think it's you're clearly right in what you say, Juliet, that ultimately people want to talk to somebody, particularly when it comes to matters regarding a difficult or complex or potentially highly impactful financial conversation. I think, to quote you again from our kind of prep for this, you said, look, at the end of the day, there's just a point people get to where they want to talk to somebody they can trust. And I don't think most people can do that with a computer system just yet. I mean, is it really that simple? Would you build on that, or just sort of nod along and say, yeah, that is exactly how it is?
Well, I think that we need to be really careful, particularly around credit scoring. So I think AI can be really interesting in terms of kind of unlocking potential areas of being able to support financing for people that don't necessarily have a credit background. You could sort of draw different, different data tools, like different access points to data. I think, though, that raises other challenges that we need to address that I don't think maybe have been. To your point around, if I'm a doctor or a banker, why should I get a different price on what my insurance policy is? It creates the possibility or potential for algorithmic bias, which we also talked about before. And so, certainly from a banking perspective, I think we can't really access those tools until we are really clear about where that bias is, what the explainability is, what the accountability and what the reliability is, because we need to be auditable on all the decisions that we make to ensure that we are being open and available for services for the whole population, rather than trying to kind of segment them down to the nuts and bolts in every situation. Because fundamentally, it's not fair to have a computer says no scenario. And so you need to be able to explain why that computer might say no in order to be able to navigate that, I think.
Which is ever harder as we get into these more complex and deeper artificially intelligent systems. Ian, what's your perspective on the black box algo challenge and this challenge of bias in data sets?
Yeah, I mean, obviously it is it's a real thing. It's totally legitimate. I think, just to play into what we were just talking about, I think it's really easy to see these things from two extremes. So at one end, you've got marketers that are trying to leverage this stuff in real time, the crunching of the big data thing from a personalization point of view. So it's all about the upsell, the cross-sell, the added value, all of that stuff. At the other end of this, you've got kind of traditional bank and government and taxing that's obsessed with fraud and kind of trying to use these AI signals to catch people out. And there's this huge opportunity in between, which is just about CX and about customer experience, and letting the machines tell you actually when somebody's having a difficult time, or where they're hitting friction in the experience where they shouldn't be, or when they really want to talk to a human, but actually they're not showing explicit signs of that. So I just think there's a huge piece where we're missing out on the power of the algorithms, regardless of their bias, in terms of just helping us in between. We're kind of using it for our own ends and not thinking about the customer still.
Well, I think that's really interesting, actually. And one of the things, and excuse me, because I'm not a technologist, but, there's machine learning and AI. But but if you look at, say, for us, one of our key metrics is NPS, which is and complaints, and trying to reduce and minimize complaints. And if you can look at your data and say, what does the activity of a customer look like before they make a complaint, so that you can preemptively deal with that, so you don't have to wait for someone to phone up or to say this has gone awfully wrong, because you're actually looking at all of the different sort of triggers that are saying, well, these can, this person is having a difficult time. And I think that's a really, really important area where we can leverage some of the technology today, because it becomes, like, from a cost perspective as well, it's much more expensive when someone actually gets to a point where they want to complain. Whereas if you can solve for things either digitally or through that human augmentation by saying, hey, this person needs to be called right now because they're having a difficult time, then actually that leads to both a better customer experience and operational efficiencies. And I don't think those two things should be looked at like they're not mutually exclusive, to the extent that better customer experience is going to lead to operational efficiencies. Because you can help them self-serve as well.
Yeah, I totally agree with everything you're both saying, and I think this really speaks to that second priority after customer service that came out in the report, which was data and analytics, was the other key area people were really interested in capturing these technologies to enhance. And I think data and analytics across NPS, for example. I mean, we run NPS at Wirelive, and our sample size is annoyingly small. It's still very useful, but I've always longed for the sample size of the scale of an organization like Barclays, because moving that needle a few points has a serious revenue impact, right? And I've always felt like that sport of like optimizing NPS and customer experience and really seeing the flywheel effect of it is probably incredibly satisfying. But it also means the stakes are high when it comes to how you roll these technologies out, because they can create billions of dollars of bottom line potentially every year if you adopt them in the correct way, which is, well, from my perspective, is exciting as a technologist. So where should we go next? I think something I think is quite interesting is that given the area in which you sit, Juliet, you're dealing with entrepreneurs and fast growth businesses. I would speculate that those people are probably quite demanding. Probably have quite very.
Did you say demanding?
Oh well, I mean, I would never self-identify as an entrepreneur.
That's a high growth business.
But yeah, I suppose we have been fairly demanding over the years as we've grown quickly.
Not to me, I'm saying, yeah, but
but I guess what I'm kind of driving at is, it seems that your patch probably actually has a type of customer that perhaps is the most challenging to automate the servicing of, because it's so diverse, the requirement, and no two fast growth businesses are alike, I would imagine, although I'm sure there are similarities in the phases they're at and the types of businesses, funded versus organically growth, scale up, and all that kind of stuff. Is there what's the silver bullet for you? Like, what could this technology give you that maybe you have a bit of now that you'd love more of, or maybe you don't have now? Is it just helping when they need that next piece of support? Is it about helping you structure better products through more insight? Like, I just love your perspective on that challenge that you have, just particularly in that bit of your world around those types of customers.
So in terms of just the customer base that we look after, and one of the reasons we set up my team is because because growth customers tend to bounce through boxes, so to speak. You're not at any stage for any specific amount of time. We need to be really adept and quick at being able to identify to identify you and to identify with the support that we can give you, because from a customer experience perspective, we have loads of really great kind of beyond banking, we call them services, where we can sort of take you on courses, we can support with scaling up, we can introduce you to our VC network and all these good things. But if we can't get the basics right for you, we can't identify who you are, when you are, and what you're going through, then then we lose the kind of value or the ability to be able to add that value later on. So I would say, one of the things that we did was to sort of look at our data and say, okay, well, which companies are growing and what are the pain points that they have, and really kind of trying to, behind the scenes, so to speak, fix those basics. So be able to say, okay, well, actually, there's a much higher propensity for these kinds of customers to experience these issues. And the reason why we're a high growth team is because we're not industry aligned. And that's because if you segment companies based on their growth, then you can actually pick off those pain points more easily rather than trying to focus on an industry sector. But in terms of the most useful thing, I think, from my perspective with data specifically, is the identification of companies as and when they can really use our help. There's two ways we can do it. One, by saying on our website, here we are, if you're having these problems, come to us. Self-identification is actually really helpful a lot of the time. And then the other is through having a really quick data pull to be able to say what a company is doing, and also being able to have the eyes to see it, because that's sometimes one of the challenges. But so often I'll speak to a company not banking with us, but who will want to move to us on the basis that they'll say, oh, well, my bank never got in touch when I got this huge contract with blah, 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 or, I got this huge investment from da-da-da, nobody ever spoke to me. And so a lot of the time banks will be trying to say, okay, well, we need to speak to all of our customers. We need to make sure that we have the right contact. But that contact strategy, a lot of the time, some people don't want to hear from us. So how do we kind of celebrate the moments in a company's trajectory in a way that actually means something to them and is memorable in some way on a scale basis, I would say. If you can fix that for me, that would be great.
I mean, I reckon we could solve that one. Ian, there's a lot of customer experience notes in there. What's your reaction to hearing some of that stuff?
Yeah, I suppose all roads lead to experience. Yeah, I think that's it. For me, it's interesting, actually. I kind of, even when I'm just listening to that, it's almost like I'm nodding my head and ticking, thinking, yeah. But I think what's an interesting perspective, perhaps on some of that challenge that Juliet's just talked about, is AI allows us to think about ROI differently. For us, explicitly, we use AI to kind of crunch big data, and I think that plays into how big traditional organizations actually can steal the march on challengers, because they're just standing on the shoulders of giants when it comes to data size. They've just got more stuff to look at, and AI will help them look at it and make good decisions. But sorry, I digress. But in terms of ROI, we use tools to kind of crunch that big data and constantly predict how much revenue is being lost in that customer experience, how much money is being left on the table that key brands aren't then kind of sweeping up as part of their business model. And if you already know what the lost opportunity is with real accuracy, then you work backwards from that. And that's a completely different way of thinking about ROI, because you can decide your ROI up front. If there's $1 million left on the table because of a bad CX, work from the fact that we're going to win that back for you. And you decide what ROI you want to attach to it, 10 to 1. In which case, that tells us how much money we've got to crack the innovation challenge. And I think some of the report talks about this. So the reason I mention it is businesses aren't quite sure how much they should invest in this. They're kind of primed for it, but they haven't actually ring-fenced budget around AI.
Yeah.
And I think just the ROI piece, and plugged into what Juliet's saying about the CX and the experience, is people like us, people like you, we can help organizations, financial services organizations, decide exactly how much they want to invest in this based on exactly what return they're going to get. And the only reason we can do that is because of AI allows us to be that accurate in a way that we've never been able to price things up before. So I just think that's a really interesting use of AI within the context of using AI.
Yeah, that sort of reverse pricing is a great perspective. And I think the trends that came out, and we've done similar work to this as Wirelive in retail and a few other sectors as well. And these themes are consistent through the different sectors. And those themes were that C-suite, senior decision makers in good sized organizations all acknowledge that AI has the opportunity to allow their organization to prosper, right? They all accept that there be a pot of gold at the end of that rainbow. Like, there is value there and it can be found. But at the same time, they all cite a lack of investment combined with an inability to justify further investment as one of their challenges, which I think is really interesting, because it's like, we all accept that this thing we could invest in will return great upside and is the right thing to do, yet we still can't make the business case to make that investment. And I think perhaps that's characterized in a number of fast emerging technologies where they're just still not that well understood, and therefore they're seen as quite intimidating, perhaps, in terms of their adoption. But from my perspective, I think these tools and services are becoming ever easier to take on. And actually, your approach to justifying ROI is probably a really good takeaway for anyone watching this that's wondering, okay, well, where do I start? How do I get a budget to try and pilot a project? I think almost starting with the saving and working back from it is really interesting. And I mean, let's bring that back into the NPS example. Most big organizations know in their NPS calculation what a point of NPS is worth in revenue terms, right? Like, it's all in the tools have all of that in them, because they know what their average profit per customer is, and they know how likely a customer is to churn based on a one tick increase in NPS or one tick reduction. So actually, you could totally reverse engineer that and say, well, if we can use machine learning on our huge data set to create a 20% uplift in NPS, that means we're going to make this much more money, and that means actually it's worth spending this much money on solving that problem, and it's become sort of self-fulfilling, which I think speaks to one of the things that came up in the report and seems to be a consistent theme across different sectors, as I say.
I call that one of the things this is my own view, not for everyone, but sometimes the organizations can look very much at cost, and actually, if you talk about commercializing challenges, and the commercial value a challenge holds, I think is kind of maybe a more insightful way to address some of the budgetary requirements that organizations have or are constricted by.
Yeah, I think even if you and I don't want to reduce it down to almost nothing, but if you, from a practical challenge point of view, you take a single CX challenge that you have in that customer experience, and you use the AI to crunch the data and tell you exactly what the financial loss of that piece of friction is. And then the question is, would you like to fix it for 1/10 of the cost that it's costing you now? And that's, if you package that up right, that's very easy for digital managers or leaders within financial businesses to take up through their kind of hierarchy to board and get signed off at scale. I just think it's useful. And I don't think many people are doing that. I still think the world is full of agencies and tech firms that, although they're super modern in their thinking, might be using traditional pricing models or traditional business plans to try and justify a reason to do something. And that's all wrong.
Well, that's no doubt one of the reasons why you guys are so successful, Ian, is you've found a different way to do it. I hope no agencies are watching this, because they'll be stealing your secret sauce. Yeah, look, I mean, this is great. We're trundling along nicely here. We haven't got a huge amount more time, but I'd like to just touch on a couple of other themes. So I think we briefly visited bias. I'd like to just come back to it. So I think that bias in data is this really interesting thing that it's increasingly in the kind of discourse about adopting these technologies. I think that whatever your political view, it's hard to argue with the fact that the world has become more diverse and inclusive over the last 12 months, right? In terms of just in terms of the awareness of some of these issues. The fact that every Premiership footballer still takes a knee at the start of every game encourages me that the genie's out of the bottle, right, on the Black Lives Matter movement, for example, and therefore that is an awareness and a public consciousness that isn't just going to fade away. I think that's just one tiny example of all the different permutations of bias that exist in our world, of course. I think that data is ultimately created by humans or the systems humans have created. So all of the data that is used to feed artificial intelligence systems or machine learning derived systems is created by us, right? It's created by the people. And so inevitably, that data has bias in it because we all have bias. In many cases, subconscious bias is what ends up in it, right? But it's layers of the onion. You have these huge data sets that are accumulated over time that without any malicious intention have got this inevitable stack of different challenges from a bias perspective. And what that means is that the systems we're creating now, unfortunately, in many cases, to Juliet's comment about the computer says no, have bias in them. And I actually, my view is, again, as a technologist, is that one of the biggest challenges about the adoption of these technologies is that where people don't understand that to be true, they simply won't even occur to them that the decisions they're being presented with from a data analytics point of view about their customers, about what products to offer, about where they should focus their marketing and sales effort, whatever it might be, may have that skew and they may not even realize. So I'm just I guess I'm monologuing on the issue. What's the question, I suppose, is where I'm getting to. What do you guys think about the issue, and what do you see from the perches you guys occupy day to day? Do you have a plan for bias? Like, do you have an idea about how you can approach bias in these data sets? Like Julia, at some point, Barclays is going to wheel out a load of amazing tools for your team to use, and it's going to be very hard for you to audit those tools to know, ultimately whether they are with or without bias. Now, of course, you're going to put trust in the amazing business that you're part of, that they will have answered these questions. But I'm your customer. I'm going to expect for you to be able to demonstrate that. And I think that's a really important challenge. And Ian, from your perspective, you're pitching and designing and delivering these systems for people. When your customers challenge you and say, well, great, you've reverse engineered this challenge and you're going to save me all this money, but how do I know the system doesn't have bias in it? How do we even approach that conversation? Ian, do you want to go first? Seeing as I ended with you, I'll give you even less time to think about a response.
Yeah. So you just blow my mind a bit. I think, I don't know how to articulate this, but we've got to get to asking the right questions. Now, that's just as important from a human point of view. There's no difference between the humans that used to ask questions of their own accord and the ones that kind of write an algorithm so that a machine can ask, I suppose. It's the same difference. So I think when we touched on this when we met before, but the name thing. So human beings make judgments and biases based on other human beings' names, right? That's always been a thing. You could argue when it comes to a job interview that perhaps a name shouldn't be given, for instance. What difference does it make who I hire and what they're called?
As is increasingly happening in HR systems globally as a result, right? They're stripping names off CVs.
Yeah, and exactly. And if you don't take that into account when it comes to financial services, for instance, and you start crunching that big data, then you start to see behavioral trends based on names. Now, that's only because certain names live in socio-economic sections of society. And if you're asking the wrong question or you're using it as a data point, so if you make what's your name important in your structure, you're going to spin off out of control when it comes to bias. And people that don't understand this kind of say, well, it's just data. The data can't lie. It's either true or it's not. If people that are called X are more likely to wear a Fitbit, then they're more likely to do exercise, and therefore I can insure them for less. That's just the truth, isn't it? And it's almost like that's completely the wrong. It's because you started with the wrong question. We've got to see this as research, and everybody knows that research will tell you very different things based on the question you ask in the first place. It's the most important part. So I don't know how we do that. I'd have to go away and think about that.
Yeah,
that's where it starts. Are you asking the right questions? And I think within credit scoring and financial services, and we know this from all applying for mortgages and all the different things that we do, sometimes the questions they ask you are unusual. So I think that's the start point.
What is your favorite tropical fruit, as we've covered today? Sorry to go a little bit philosophical. This is maybe bordering on a 2 a.m. conversation, but I'm interested all the same. Julia, anything from your perspective that you feel comfortable talking about? I know I've probed your Barclays alliance there a little bit.
Well, look, I mean, wouldn't be able to comment on, the way in which we mitigate fraud bias. What I would say is, in terms of new technologies that are being implemented, we wouldn't implement them until we have the visibility and the ability. Like I said earlier, that transparency is so important. We have to be able to understand how something has made a decision in order to be able to communicate that.
Yeah.
But I think that the more general question in terms of the way AI specifically and algorithmic bias has the potential to influence our society as a whole is a much broader ethical kind of dilemma, because do we want to live in a Black Mirror society where your behavior is constantly impacting your like every decision that you make, every social media interaction that you have somehow forms an echo chamber that then restricts your ability to behave in a free world? And how, like, where do those freedoms go, and who monitors them? And that I think is quite definitely a 2 a.m. conversation, but an interesting one nonetheless, that I think is broader than financial services.
Thank you for humouring me, both of you, and my slightly tangential question. But I think there was a really key piece of insight in all of it, but particularly in Juliet's response there, which was that if you're trying to position a product or service for an organisation, of Barclays' size to purchase, you simply have to be able to demonstrate the audit trail. You have to be able to explain how you're reaching a decision. If you're using any black box algorithms, you're probably going to have a pretty hard time. You need and ultimately audit, right? Compliance and audit is such a key part of the procurement requirement that financial services businesses have, that typically is actually very hard to deal with in this area of technology. So I think, definitely it's an area that is going to continue to be a barrier for adoption of AI in financial services, is this difficult trifecta of compliance and security and trust and those different things. Kind of out of time, guys. It's been a fantastic conversation. We've had a bit of philosophy. We've had a bit of techno babble, which I'm probably responsible for. I think we've covered some of the really key, interesting trends that came out of the report, notably around customer service and trust, and that drive towards data analytics and the insight it can offer. I think that theme of augmenting human intelligence came up a number of times, and I really like that personally. I think Microsoft's view on it is, enabling people to do more, I think, is their strapline. And I think that's quite a nice way of putting it. It's not the most catchy phrasing, but it's the truth of it, right? It's about how do we use these technologies to enable humans to be the best they can be, but ultimately to do more with less. And that seems to have come up through a number of the threads of the conversation today. Any final thoughts? Ian, any final thoughts? Any reflections?
It's a bit of a double-edged sword, really. The thing that I wanted to say, don't know if this is positive or negative, is just we're at a really interesting point, certainly with pandemic and changes in behaviour and changes in how businesses have to think about it, is that automation at scale really is the silver bullet, doing more with less. But it's come at a really interesting time morally, where when businesses adopt that, are they actually going to find a way to do more with less people? And there's a moral dilemma in there. Is this what might come true? Is the fear that automation enabled you to get rid of people? And it's almost like that was never the case. It allows human beings to just simply do more. But at this point, where hundreds of thousands, millions of people are in furlough, how is this going to play out? So it's kind of like, that's the thing that's kind of the moral dilemma going forward, I think.
Yeah, I totally agree. And we always encourage people, don't think of it as an opportunity to reduce the size of your team. Think of it as an opportunity to enable your team to deliver better service for your clients, which ultimately gives you more revenue. So see it as an opportunity for growth, not an opportunity for cost reduction. But I think you're absolutely right. In a time where people are very focused on costs for all the reasons that are obvious, in some cases, these technologies will also be seen as a way to deal with that. Julia, any final thoughts, any reflections, fruit related or otherwise?
No, I would just I would just say that point around the augmentation and redeploying rather than cutting. Automation is great, and we've had a productivity challenge over the last years around people being reluctant to adopt new technologies, and it shouldn't be seen as I think there's a way of looking at it like it's an opportunity to do more with less time being spent on things you don't have to do. Would be my hope anyway for the new world.
Less menial labor, more creative thinking, and ultimately letting humans do what we do best, interact with each other, come up with creative solutions to problems, communicate, empathy, all the interpersonal stuff. I totally agree. So what a lovely upbeat note to end on. Thank you so much for that. Guys, great interview, great panel session. It was a real joy to talk through some of those themes. Thank you both so much for your time, and Ian for the team at Sagittarius for participating and putting this together in partnership with us. You guys have been integral to this, and we couldn't have done it without doing it together. So your experience in the sector, and particularly on the customer experience side, is so interesting to us, because we always get a bit lost in the tech. And Juliet, to hear somebody who lives in that world's perspective is so great as well, particularly given what I would characterize as probably quite challenging patch that you're in because of all the different demands that are placed on it. And God, what a year, and no doubt it's been in the financial services world. Well, for all of us, I suppose, but for you guys too. So thank you so much, and thanks for watching. Whether you're with us live or you're watching back on YouTube at a later date. That was Wirelive episode 7. If you'd like a copy of the report we've talked about extensively today, we'll make it available in the comments on this video, and also available on the Wirelive website, Sagittarius website, and various social channels as well. So, or if you can't find it, just ring us. We'll send you a copy. Thank you so much, everybody. Thanks for watching, and see you next time.
Thanks.